This video is for informational purposes only and does not constitute financial, legal, or investment advice. Trading can be volatile and may not be suitable for everyone. Please consult with a financial advisor before making any decisions. The views expressed are the creator's own and not professional recommendations. Ever wonder how top investors consistently outperform the market? Well, you're about to find out. In this video, I'll challenge myself to learn and implement the secret strategies of professional investors in just minutes. And so can you. Take Warren Buffett, for example. He once said, "Rule number 1, never lose money. Rule number 2, never forget rule number 1. Buffett's strategy is rooted in long-term thinking, patience, and sound judgment, things anyone can practice. Another example is Ray Dalio, who built one of the world's largest hedge funds by diversifying assets globally. Diversification is key to reducing risk and maximizing return, and you don't need millions to start. Now, let's talk about the struggles most investors face. Many people don't have the time or resources to monitor every market shift. Others get bogged down by information overload or emotional reactions like fear and greed that cloud judgment. How often have we made impulsive decisions based on the latest headlines, only to regret it later? For instance, remember how in 2020 many investors panicked during the COVID-19 market crash? They sold their stocks at a loss, only to see the market bounce back later. Fear drove those decisions. But pro investors often stay calm, stick to their strategy, and profit from market rebounds. So how can we, as everyday investors, learn from the pros? Let's break down some key strategies that can elevate your investing game, no matter your experience level. Diversification through indexing. One of the most effective strategies is diversification. Investing in index funds, which track the broader market, is a great way to spread your risk and tap into long-term growth. You're not betting on a single company or sector. You're betting on the entire economy. John Bogle, the founder of Vanguard, popularized this approach because of its simplicity and cost-effectiveness. Look at the S&P 500 over the last decade. If you had consistently invested in an index fund tracking it, you'd have seen significant returns without needing to pick individual stocks. Dollar cost averaging. Next is dollar cost averaging. This strategy involves investing a fixed amount at regular intervals, regardless of market conditions. It's particularly useful during volatile times because it prevents you from trying to time the market. By investing consistently, you buy more shares when prices are low and fewer when they're high, averaging out your cost over time. Think about someone who started investing $100 a month into the stock market 10 years ago. They would have benefited from periods of both market highs and lows, but their consistent contributions would have smoothed out the fluctuations. Over time, their investments would likely have grown significantly, all without needing to guess when to buy or sell. Technical analysis and trend following. Many pro investors use technical analysis to spot market trends and make decisions on when to enter or exit positions. This can sound complicated, but it can be as simple as using tools to look at historical price patterns and moving averages to predict future price movements. For instance, traders like Paul Tudor Jones have used technical analysis to identify market cycles and profit from big moves. Tools like moving averages or the Relative Strength Index, RSI, can give you valuable insights into when a stock might be overbought or oversold. Clear investment thesis. Finally, one of the most important things is having a clear investment thesis. What are your financial goals? What level of risk can you tolerate? Pro investors always have a plan. They aren't swayed by every market dip or spike because they've already set their strategy. Consider Elon Musk, who said, "I think it is possible for ordinary people to choose to be extraordinary." His investment decisions align with his long-term vision for space exploration and sustainable energy. He doesn't focus on short-term profits, but on realizing that bigger goal. You can apply the same principle to your own investments. Define what you want to achieve and stick to your strategy. And there you have it, some of the key strategies that pro-investors use to build wealth. Now, remember, it's not about reinventing the wheel. It's about adopting proven strategies, applying them to your own situation, and being consistent. So, what's your take on these strategies? Have you tried any of them? Drop your thoughts in the comments below. If you enjoyed this video, make sure to give it a thumbs up and subscribe to the channel for more investing tips and wealth-building strategies. Don't forget to hit the notification bell so you never miss an update. In our next video, we'll dive even deeper into how dollar-cost averaging can supercharge your portfolio. See you then.